Sunday morning in Thailand. It's about 7:30, so it's around just after midnight in the UK. So I'm looking at charts for the week starting, what is it, tomorrow, 19th of November. Okay, so this is what is key for me for this week. This wedge pattern on the US dollar index, which, as you know, I've been talking about all week. So we rejected the upper trend line quite nicely, and as you can see, we've got a significantly negative candle on the weekly chart. So we've rejected it, and this does look bearish for the last week or two of November. We should dip down to the 200-week moving average, which is around 95.90, 95.85. If we get below the previous week's low of 95.67, we can come down here. Now, this trend line is obviously rising, so it would have been nice if we tested it this week, because it would have been convenient for me having the 100-week moving average and the trend line in the same area, but that's not going to be the case now. We're going to be looking at the trend line at around 95.50, and then we've got the 100-week moving average, which I would say is less significant. That's going to be around 95.05, but we'll deal with that situation if we get there. But you can see what's going on here. So you can see why I think it's negative. Note how this candle here, which wasn't as negative because the red body is not as big as this red body, led to significant declines down to this trend line in the weeks afterwards. So possibly we could see the same thing. Clearly we're going to have to get through 95.70 to cancel that negative candle and see the dollar index break higher. On that note, I don't think this will be relevant for this week, so I don't think we're going to break higher, but 61.8% Fibonacci on the weekly chart going all the way back to the beginning of 2017 shows up at 97.87, so that really would be the level to watch. That would also be strong resistance if we were to get up through 97.69, so that 20 pip area would be a good selling opportunity with a stop somewhere above 98.00. Just bear that in mind if we do happen to rocket up unexpectedly in the dollar index. Also, it's worth noting while I've got this bigger chart on, if we get through 95.00, we'll be testing this. What month is that? October. That October low around 94.78, and then I guess we'll get down to the 38.2% fib at 94.20. But again, we'll look at that as and when it happens. Just a quick recap of the daily chart. Once we beat the October high, the daily chart really did look good. So I'm sure that sucked in some bulls thinking that this bull trend was going to resume. But fortunately, we looked at the weekly chart and realized that there was a potential for a reversal, and indeed that did happen, of course. So there are some longs caught here, nice little bull trap on the weekly chart. And that's another reason why I think we can decline further. These trend lines are relatively minor. I've got them in there, and they're certainly held on Friday, but I wouldn't see that as a buying opportunity. A break below this trend line, we'll probably pause here at 96.20, 96.15, but the real support comes down at 95.50 from the 23.6% fib. This cluster of moving averages, which is just trending sideways. You've got the blue 100-day down at 95.35. So that kind of ties in quite nicely with that trend line that I showed you on that wedge on the weekly chart, where we had support around 95.50, 95.40. Ties in nicely here as well. So this really would be a nice buying opportunity. Let's go back to the weekly chart. Down here, and if we were to bounce nicely off there, you can see, oh yeah, 95.50, 95.40, then maybe we can even retest this resistance up here around 97.50 to 97.90. Those are the big levels to watch for in the dollar index. Before I finish, the 500-day moving average is around 95.15, so just a fraction above that 100-week moving average. So clearly a break below 95.00 is going to be quite a nice little sell signal for us. Aussie dollar, Aussie versus the US dollar. Right, I was concerned that this week we would break up through 93.00, and that happened on Friday. We paused here on Thursday. Friday we broke through it, so that's pretty much as expected. As you know, on my spreadsheet I had watched for the break higher. I hope you managed to jump into that break, because bearing in mind that dollar index chart that I've just showed you, this does look really good for the Aussie dollar. Now, if you're not long, you do want to be buying it on any dip towards 73.00. 73.00. Get my numbers right. 73.00, 72.80 obviously is good support now. So if we do dip and you're not long, try to buy into that. I see no reason why we can't get up to these highs here. around, what have we got here, 73.62, 73.80, and really the target for me would be 74.40 to 74.50. So there's a decent swing trade opportunity at last, having sat through periods of month-long periods of action like this where you really can't do anything, and even this wasn't great to trade. I think finally we're going to get a decent move, and as I say, if you can get it around 73.00, you could be looking at 150 pip on a swing trade, which would be lovely. We should be getting short up here. That would be enough, and that will probably quite tie in nicely with that support area in the dollar index as well. I'm hoping. We'll see nearer the time. New Zealand dollar's been a nice technical market. Initially we halted right up there at the 68, yeah, get my numbers right, 68.00 area as expected, and reversed. If you got into a little short there, that did quite nicely. We bounced off this trend line, as you can see, and then we pushed up as I expected we would do, up through 68.00. If you managed to jump onto a long there, that was nice. In fact, looking at this chart on Friday, first time I've looked at it, I have to be honest, we got a low of 67.97, so I had a buy area down there, I think I'm right in saying. So if you bought down there, that was a tasty profit just on the day. You can see we're testing the 200-day moving average, and that's held us back. So this will be the first real challenge. At 68.90, we're going to have to get through the low teen area in the 69, 15, 20 area to start the next leg up. I wouldn't be surprised to see us reverse back down and maybe give us another buying opportunity around 68.00. Anyway, watch for the break above either 69.00 or a buying opportunity down around 68.00. Dollar yen was also pretty kind to us last week. I warned that 114.00, 114.10 could be the high. It was a strong resistance area. We got to 114.20 and reversed. So that was pretty good. As you can see in the weekly chart, we've got a bearish engulfing candle, big red body, and a close below the 200-week moving average. So this is looking pretty negative on the weekly chart. On the daily chart, we seem to be just holding the 55-day moving average, and we've got this decent trend line going back to March 2018. We blipped below it, but we've closed just on it. What do I make of that? We're going to really have to get back up through 113.00 for a bounce. I favour a break lower. I favour, well, we'll see. If we open below 113.00, then the sellers are in control and will push us lower. This doesn't look like a bullish chart, so I do favour the downside. Any bounce, I think we'll sell into. Really, we've got to get below, get above rather. Yeah, okay, so Thursday's low was 113.10. Use that as your guide. Sell it around 113.00, 113.10, and you can put a stop in above 113.25 should give it enough room. That's a really low risk trade, 15-20 pip losing trade, potential loser on the stop, but on the downside with a target down here around 112.25, 112.15. You've got really nice downside potential. Good support area. I wouldn't be surprised at all to see us bounce off that on the first test at least this week. Okay, those are the levels you want for the dollar yen. Euro yen, what a mess. If you can make sense of this chart, well done. You're a way better analyst than me. I cannot make sense of that at all. I'll just have a look at the weekly chart in case I'm missing anything. No, I'm not. Yeah, if you can see something in that, please do let me know, because this doesn't make any sense to me whatsoever. There's just no opportunity there. Euro US dollar. The euro's obviously benefited from that weaker dollar that we saw on the index chart, the dollar index chart. Not bad technically. This resistance around the mid 113 area, 113.50, 113.60, really did work nicely on a few occasions. We had the 100 period moving average giving it some weight there. On Friday we did reject it initially we traded up to 113.68 and down to 113.18. So there was some scalping profit in that trade. But then you can see in the afternoon we decided to break higher. Now if you went with the break, if you managed to buy into that, we had a really good run up, and we now face quite a lot of resistance at 114.40. So let's call that 114.35, 114.45. You've got a trend line, only a short-term trend line, so not a big deal, but it is reinforced with the overlapping fibs and the 200 period moving average. So watch that. If you're long, nice place to take profit. It would be just so sweet if we could turn around from there, get a little short on, buy it back down here at 113.60, 60 area and get long again, and then see it push up and break through there on the next test. That's what I'd like to see. That's what we could see, but who knows? That's just an idea for you. Yeah, I do think on the second test we would break up through here. Would be nice to get along down there. That's it. That's all I can say. See what happens. Just reading what I wrote there. I had a short at 113.55.65. So again, that did work on Friday. I had my first target at 113.20.25. So I think I'm going to count that as a nice trade. We traded down to 113.20.25. We obviously bottomed 2 pips below. Then I had buy a break above 113.80. So if you managed to buy the break above 113.80, you may have been short again and got stopped. I don't know. But we had at least 40 pips as we reached 114.21. And then I've got this selling opportunity at 114.35.45, which I put on my report on Friday. So yeah, ties in with what I've said. Let's see what happens.